to this week's trading idea for the week of April 22nd from thetraderguy.com. Looking at the spot gold, and I will emphasize that this is a spot gold price for my broker. I look at the weekly chart, and I see a nice hammer. And this hammer also is focused around the 1400 level, for lack of a better way, a better place to put the support level. And as you can see, there is a cluster back here that it does make sense. And we've seen quite a bit of a little bit of a pullback here. Looking at the shape of the candle, it is a pretty much a perfect hammer. It's just about how you want to see it. And it does look like that perhaps a bounce in the gold market could be coming. Whether or not it is a return to new highs, that might be a completely different story. But we do have to keep in mind the gold has lost as much as about $300 or so an ounce at one point over the last couple of weeks, and at the very least, it's oversold. And there is the possibility that there's been a great flush of the weak hands out there. There is a lot of hot speculative money that's gone into the metals market. Now, at this point in time, I think it's fairly safe to say that most people involved in gold now are the true believers. And while I am the very first to admit this has been a nasty, nasty pullback, breakdown, whatever, the truth is that the gold markets really have been pretty much a one-way trade. There's been a couple massive corrections over the last, say, decade or so, maybe 12 years. And it's always proved to be a buying opportunity. Now, we have to think about what's different this time, and the theory is there's hardly any inflation. But that's how governments measure inflation. The truth is, sooner or later there will be. Most people accept that. So then comes the question of whether or not gold rises in the future. So for myself at least, I have been buying, and this goes with silver as well. I've been buying precious metals, but I've been buying them non-leveraged, actual physical. This is more of a, I think, more along the lines of retirement or rainy day fund. But I do find this candle very interesting, and a break at the top would be very, very interesting. We obviously would run into some trouble here at about 1550. But if we get above that, I would have to believe that we would test the top of the previous consolidation area at 1800 and possibly farther. So this is a very interesting spot for gold, to say the least. Another thing that's caught my attention is that on the monthly chart, if you draw a fib from a swing low there to this extremely bullish run, you can see that, let me clean this up a little bit, you can see that we basically pulled back to right around 50%, which of course is a place where a lot of traders would get in. If you made the fib a little longer and back down to here, say in 2006 for the entire run, and took this nasty pullback out, you would see that we are sitting on the 38.2, which is another natural place. So while I am not ready to start buying in the futures market, I certainly think that gold is going to be very important to watch. It's also going to be a nice risk on, risk off type barometer. If you look at the yen related pairs, and I will go ahead and pull up, let's pull up the dollar yen, and let's change these to candles real quick. If you look at the weekly chart, you can see that we've just about busted the top of the shooting star. Well, the top of the shooting star represents serious resistance, and you can see that we're right about there at 100. If we can get above 100, that would be pretty big. Looking at this on the monthly chart, you can see just, I mean, we've already busted the top of the previous month's shooting star. And this was predicated mainly, I believe, at least the resurgence, on the fact that the G20 came out with a statement on Friday, late in the session, that suggested that they were okay with what Japan was doing. As long as they were careful and mindful not to hurt other economies in the process, they fully understood and accepted that. Well, that's kind of the final green light. If nobody's really going to stand in the way of Japan of killing their own currency, then they'll get their way given enough time. So we could get a risk on rally, and I think gold will be the biggest indicator more than anything else. If gold starts to rally, that'll be a good sign that your typical risk on trade should start to work again.